Marin Katusa, thanks so much for joining us again on Wall Street Unplugged.
It's my pleasure.
So you are in a quarantine zone because boots on the ground research. You left the country in Canada, you came back. I guess let's start there because you're going to hear you on the phone and the reception is good enough for an interview. But I just want you to talk about that a little bit, because not about the project, just the quarantine process we talked about just before we got online here and went live. It's kind of crazy, right? The penalties, and explain that process for me. A lot of people don't know how it is in Canada.
Yeah, so a lot of people are just saying, hey, Marin, like after 3-4 days, if you don't have any symptoms, just go with your life. And I would love to do that, but you have to sign documents that say the government, the federal government here in Canada, checks up on us. So if they catch us, they're doing it through phoning your cell phone. And if they're tracking your GPS and saying, you're not at the location you're supposed to be, if you get caught, it's $1 million fine or up to 3 years in jail. And, I just don't want to deal with that. So, here I am. I'm so bored and lonely that I thought, what the hell, I might as well even talk to Frank Curzio.
3 years. So if anything happens and you do go out and get 3 years, is it okay if I hire all your employees and take over your newsletter? You gonna be okay with that? Hey, I'm your friend. I'm going to let you know up front, right?
There you go.
All right. So let's get into it here because we've been friends for a long time, probably a decade now. And I want to start with gold because everyone's, now that you've seen all the gold commercials, it breaks 1,800. Everybody wants to invest in gold, but you have been positioning yourself for this moment for a very long time, investing in so many private placement deals, a lot of those that you share with me that are doing incredibly well now. From someone that's positioned themselves and is actually seeing a lot of your investments really take off now because you were in very early stages. What is your position on it now? Because I always get scared when the whole world is on one side and almost everybody would tell you have to buy gold right now when nobody wanted it probably 12 months ago and even well before that. But are you still bullish here, considering we're definitely going to see governments around the world, central banks, they're going to continue to flood the markets with cash, and that's not stopping anytime soon. But I wanted to get your thoughts now as someone who's positioned himself and did fantastic in it and letting a lot of these things ride. But what do you think about gold now and gold stocks in particular?
Okay, so it all comes down to allocation size, your risk. So many people are now going down what I call the food chain, Frank, going to crappier, weaker management teams, riskier jurisdictions, earlier stage projects because, hey, it's a gold market, right? And a lot of coconuts that were trying to do other types of deals are now coming back to the gold market. So I'd be very, very careful about what's going on. I'm seeing every buffoon and moron get financed. And my stance. So, I call a spade, and that doesn't make me the most popular guy in the world. The other thing I'd be very, very cautious about, Frank, for everyone listening to this, is a lot of the social media and all these guys trying to pump their returns. Well, liquidity is a huge thing. And you see so many guys go, Marin, you did so well with Equinox, but look at my deal. I did, as good, and, I don't charge and this or that. Yeah, well, look at your deal. It trades by appointment. It's a, $15 million market cap. You got to be very careful about, allocation size. What are you buying? What level? Now, look, do I think gold's going to go higher? Yeah, I do actually. But that doesn't mean a lot of this, the deals on the street are going to go higher. How are they structured? Who are they? What is their cost base? I had a very, we can talk about the deals that you've gone in with me on. It's a very simple thesis. My subscribers and I get in at the same price as management. And then you're aligned. Your skin in the game is at the same price. Go with the right people. And, so like my subscribers, we've had an incredible run. But I've also advised them that, hey, we've had an incredible run. It's time to take a Katusa free ride. So if you sell 20% of a position and you got 80% for free, that's prudent and that's smart. And I'm also looking at now other sectors that people are scratching their head going, what the hell's Marin doing? And it's the exact same thing that they were saying to me a year and a half ago when I was going big into gold. So you got to keep things into perspective. And like you said, when every newsletter writer who doesn't have a pot to piss in is talking about all the money that they're going to make in gold, you got to start thinking other things, because there's a difference between gold and gold stocks. They're actually like two very different things.
And it is interesting because we've seen gold prices hold up rather well from 2013, 14, to 2017, 18. But a lot of gold stocks have gotten crushed over that time. We had a little bit of a bull market. I think it was beginning of 2016. Aside from that, but you're right. When we see with all bull markets, no matter what sector you're in, right, it's the shittiest stocks in a bull market you want to buy because they're going to go up the most, just like they're going to go down much more than the overall market during bearish times. Is now the time, because like you said, a lot of a lot of garbage companies are getting financed. But when I look at some of the PEs in these studies, and again, a lot of these projects for junior mines won't get developed for over a decade, but 2-3 years ago they were based on 1250 gold prices. Then they've been up to 1450. I mean, if we go through 2000, it seems that some of these projects could be economical when 2 years ago they weren't. Are you looking at it from that kind of basis, or are you looking at it like, hey, the original projects, the original companies we liked are even much more better now and likely to get developed, considering gold prices could push through 2000? I mean, let's start there with the process.
Yeah, so those are more advanced assets if they have like a bankable feasibility study that you're talking about, right? So you're looking at an asset that's been around for at least 5 years. It's seen, at least to get to that level, you're looking at least 25 to 30, 40, $50 million worth of drilling. So you've had a lot of time to look and study at it. So let's just take I don't know if you want to use a real example or not, but you got to look at the team who's doing the study, okay, and at what stage is the asset. So there's assets out there that are using $1,400 gold, and the economics look good. But now what happens is is it refractory ore? Is it not? What about cost inflation? Everyone's forgetting what happened in the last cycle where just gold went 1,800, but the cost inflation, the actual cost to build the mines went up. The governments around the world, they wanted a higher take. The unions wanted a higher take. The royalties, they all wanted a higher take. The trucks and shovels, they all wanted their little take, and things started getting a higher price. Remember when I took you out to the mine, the tires were trading at, $40,000 a pop. You sit there and you're like, what? So these different things, I use, and the guys on the street, like the smart guys, are using 1450, 1500 to run their economics. Remember, in January it was 1500. So the financiers, the guys who've been around a lot, they're not using the spot prices. And more importantly, if a management team are saying, hey, look, we're going to get bought out because look at our economics at 1800. The bigger mid-tier companies and the majors, they're not using $1,800 gold. Most of them are still using $1,400 gold. So the market is at a wait and see what happens to gold. Now, I do think gold will eventually go higher, but I'm also pragmatic about it that it could pull back, right? I could see gold pull back, and I'm fine with that. I actually hope it happens. We're cashed up, and there's some great value if it does happen. But the M&A, the mergers and acquisitions, it hasn't quite taken off the way people expected because the bigger companies aren't using $1,800 gold because they're comfortable with the cash flow that they're getting. So a lot of the stocks have run, and then because of the market caps of these companies, the bigger companies are going, well, at $1,400 gold, the market caps are expensive. If you use 1,800, okay, we understand it, but we're not ready to use 1,800. So that's kind of where the market's at right now.
So what would you tell investors to focus on? Because majors are going to be a beneficiary, but they went up for a while. They've been going up for a good 12, 18 months, steady trend upward. Slow down a little bit. I mean, they've been going up, but kind of holding steady over the past few months. Royalty companies have surged incredibly, which is, just insane valuations, the highest valuations they've ever traded at. Or is it, hey, we're being selective in some of these juniors where we're still finding some ideas?
So for me, it's risk mitigation. Like yourself, I've traveled the world and I'm really looking at this from a macro perspective. Frank, I've done a video and I really urge all your viewers to watch my swap line concept. And It's hilarious. I've had so much negative feedback within the industry on the swap lines, yet I've had brilliant, experienced, super sophisticated guys like Tom Kaplan phone me up and say, wow, like I've never thought of it in that way. I really want to talk to you about this. And I actually recorded a video for my an interview with Tom Kaplan and I talking about it. And I really think with what's going on in the global macro perspective around the world, I think the big shocker is going to be how the foreign governments are going to treat the foreign mining companies with that gold, because gold is money and gold is access to US dollars. And I think this is the first time in my career that I've seen analysts across the board be so complacent with basically adjusting their risk tolerance. You're going to tell me that the risk that you put into a spreadsheet, your discount rate for something in Zambia, Zimbabwe, DRC, is going to be the same as in Nevada? Not a chance. But that's where we're at in this market, Frank. So, I've been around I lived on the road for 15 years, man. I've sacrificed so much personally to get to where I'm at. And I'm looking at this going, yeah, you know what? I wouldn't bring my daughters here. I wouldn't bring my wife here. I wouldn't bring my parents here. And I think that's been really forgot in this market. And because so much money is being managed passively through ETFs, so it's like a fractured market. And, I don't want to get too much into that because I've written about it for years. But now you have this fragmented market where everyone's like, okay, what's going to be the next Equinox? What's going to be the next Liberty Gold? So I'm going to go further down the food chain. I'm going to take more risk tolerance. I'm going to go to Papua New Guinea, or I'm going to go to, all these different places. Well, I've actually been to those places, and I really don't want my investment dollars there because I don't think the market has accepted or truly understand or calculated the risk tolerance. The other thing that blows my mind is the gains, the cost of capital. Like, look at some of these deals that like some of the big streamers are paying up for. At 18, if you use $1,600 gold, their return is like 3%. So they're pushing this to the max because of their cost of capital. It's just not smart business. And when you start calculating potential changes in these negative swap line nations, there's going to be a rude awakening here. And yes, I'm not saying it's going to happen tomorrow. I'm saying over the next few years. But where I'm looking at is where the rule of law is respected, where you can just drive up to your mine site and look at things. And if I'm comfortable taking my family there, you do. Like, Frank, this is the irony of it. There's this misconception that you have to go to the inner jungles of Africa or some risky tolerant place to make the score. You've seen the returns I've made. I have outperformed everybody on the street, and I'm not taking any of the risks that the street's taking. You do not need to take those crazy risks.
Well, let's dig in a little further here, because one of the 5 things that I focus on when it comes to investing in a lot of these junior miners, especially, right, are, the management team, make sure that they're fully funded, strong balance sheet. They're not going to have to raise a ton of cash, at least right off the beginning. Geography that you've been talking about the whole time, right? Also, infrastructure in place. People don't realize how much it costs for water, buildings, roads, and lights. Make sure the project is actually good, right? Could be scale, but and last is insider ownership, making sure they have stake in the game. That's my playbook, which I've learned from you. I've learned from Rick Rule. I've learned from just following you guys around for such a long time and going to projects with you. Take us through this, because one of the deals that we've actually shared, the private placement in Curzio Venture Opportunities, one of our newsletters, with Equinox Gold, which is a company that you put together. Explain that, because to me, it's remarkable. And, I'm going to pat you on the back here, and I love it because every time I pat you on the back, you're like, I know, baby. But what you did for Equinox, seriously, this is going to be painful for me to do, but I have to pat you on the back because the group of people that you brought together, how you structured this. And it's funny because even I got a little shit from my subscribers at the beginning because the gold market sucked. But now you're looking at Equinox Gold, new high, continue to surge, everything in place. Talk about how you put that deal together, because it actually, as you talk about that, it filters into almost everything that I talked about that you've taught me to focus on when you're investing in these stocks. I think it's going to be incredibly helpful for our listeners.
Well, you were actually the the initial seed of that happened was on the flight back from Pebble. Remember when we were on the Pebble flight? Was
Yep.
that like July 2016?
Mm-hmm.
And on that charter plane back, it ended up that David Lowell was sitting beside me, and you remember how amazing it was. Remember that dinner? Rest in peace, David Lowell. But like, remember, I'm kind of like my crew are these older, brilliant minds that I love hanging out with, and learning from. And remember, you were sitting beside me, going like, "This guy's drinking more than us. He's hanging out late night. He had his dessert. It was 11:30 when we walked out of Anchorage. Remember, it was like still sunny. It was just such a mind twist for all of us. And then on the way back, he goes about an hour into the flight or 2 hours or whatever it was. He goes, man, I really enjoyed this trip. He goes, I think you're onto a monster here. I'm going, thanks, David. Like, this has been a lot of work. I thank you so much for coming. He goes, you remind me of my partner. And I go, he goes, my first partner in the copper business. I go, I didn't even know he had a partner in the copper business early on. And he goes, he was a ball of energy. And he goes, he handled all the business stuff. I did the geology. And, at one point, I think they owned 2/3 of all the copper porphyries in the world. They just made a fortune. Like, a lot of people didn't realize that he was a multi-billionaire. And he was like one of the like down-to-earth guys ever. Someone that I'd love to model his personality, just how great he was and generous with his time. And he goes, let's do a deal together. He goes, I want to be partners with you. He goes, you give me energy. And I go, oh man, David, like my life is so busy right now. I've got Altera. I've got this other dynasty. I just spun out, my own company. I've got my whole staff. And remember the day before we left, my house flooded. Do you remember that? House flooded.
Yeah.
So I was just like, I was up to my eyeballs in like stress and headaches. And he goes, Marin, it'd be really fun. Think about it and let's do something together. And I thought about it and I said, hey, like, what happened to your partner? Like, did it end like negatively or like what happened? He goes, oh no, he died of a heart attack. I went, oh no. I was like, okay, let's help those parallels end there. And I said, look, David, I go, rather than doing a new deal, why don't I help you solve one of your headaches? Lowell Copper had incredible assets, but it was stuck in permitting and the market cap was pretty cheap. And I always wanted to buy it, but it was one of these things like it was so tightly held by David Lowell, Dave DeWitt, Marcel DeGroot, Catherine McLeod, and Lucas Lundin, all great names in the game who've been around for a long time. And they would always finance it themselves. And I don't know if you remember when I took you up to what was supposed to be Copper Mountain 2.0, and the vision that I had is when we started Copper Mountain, we created Gold Mountain, which when we were going to sell Copper Mountain, I'd take that team and build a gold company back then. That was kind of my vision. And then we got kind of stuck, and David loved the idea. I said, well, why don't I bring these assets together? And he goes, okay, great, you're going to run it. And I go, no, man, I can't run it. And then I thought of Greg Smith, who I always had a lot of time for, but we never did a deal together. And he was running something called Anthem United. Anthem United was like a toll milling agreement in Peru. And he was kind of stuck with it too because of the whole permitting and all that. So he said he loved the idea. So as we were working out the deals, from the airport we landed, I drove David to his hotel. Within that 20-minute ride from the airport in Vancouver to his downtown hotel, I phoned up Marcel, Dave DeWitt, Greg Smith, and Jim O'Rourke, the three majors of each deal principals. And I said, let's meet the next day. And literally in 30 minutes in a room the next day, there was a photo of it, actually, all of us together I took. And they agreed to all the terms. We raised the money and we called it JDL, named after James David Lowell. That was the ticker symbol. And then we went after the first asset, which was the Arizona. And then we convinced management to do the merger because we were able to raise the money. So for my newsletter, we raised $140 million without taking any fees, and it went right into the company. That was kind of the advantage that I had over the bankers at the time. Not a single brokerage could do that in the business. To give you a perspective, it took two of the largest firms in Canada, two of them combined, to work to make 20 million, and we did 80 million on that one financing. So they did 20, I did 80. So then that's where Trek was born, and I hated the name. That was Christian Mila. It was the only time we ever had a disagreement. He's a good guy. He became CEO. Greg Smith then became president. Marcel was on the board, and that whole Jim O'Rourke, and they worked together. And the asset was in Arizona that Roman Schlenko was my geo, and David Lowell really liked. So I went, look, if the two best geos that are living on the planet today give it the thumbs up, I'm going to go for it. But like you said, the amount of hate that we got on the street, and all the trolls trying to bash it, blah, 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 whatever. Put your head down and get to work. And, you saw how much money I invested into it to make it work. So during that same time, so we're talking now, I guess it was maybe May of 2017, during all his financings, because Ross is a good buddy of mine, he likes my style, I'd put him into all the deals that I would do. And I was in his office, our weekly coffee meeting, and I brought up the idea. I'm like, look, so going back, I was one of his largest shareholders in a deal called Altera that was doing really well. And towards the end of the meeting, I'm like, hey, Ross, I got an idea for you. It's different, but think about it. You have Anfield Gold. It was it didn't work out the way as expected. And he has a cash box for about $55 million in cash. I said, why don't you merge that with Trek and become chairman? And Ross said, well, man, I actually have a different plan, but that's an interesting idea. And when he shared with me what the plan was, he was going to merge it with his friend Richard Rourke's deal called Castle. And I knew the asset. And I said, well, that's a big asset, but it's not going to be producing for a few years. We're ready to go. We're permitted, and we're building it. And he goes, really? You think you're going to build it? I go, I'm telling you, we're going to do it. And Ross sent his crew down. Then he went down. And he goes, look, man, are you open to a three-way? I go, well, okay. Let's, we started this with a three-way. So there's a merger of three companies, then a merger of two. And then we ended up doing a three-way. So we did that many deals in 16 months. And Ross became a chairman. But I said, let me name it, because I hate the name Trek. So I remember on the Friday night, and I kept the emails because Ross, and I said, you guys will never remember me doing this, so I'm keeping the emails. And he goes, don't you got something better to do on Friday night? And I said, actually, I don't. I really want to name this. And I said, Ross, your first big deal was Equinox. I think this will be your last big deal, so why don't we call it Equinox? He liked it. Greg Smith came up with the ticker symbol for EQX, and Ross just took this. He invested somewhere in the order of about $150 million of his own money. He was able to bring Mubadala, Richard Rourke's capital, and then it was really Ross who spearheaded Los Feliz takeover, and now it's Ross's deal. He's the chairman. He's the guy. He's the force of it. I'm still one of the largest shareholders, and this is going to be a 1 million ounce producer internally. Like, they don't need to buy out any other deals, and they're fully funded to do that. So it's an incredible situation, and it gives you a real-time perspective of how hard it is, even when you're doing it, how expensive it is. And even if you bring the best people in together, we were trading at like 0.4, 0.5 NAV for 2 years. And I kept telling everyone, like, this is my number one pick. This is my number one pick. Now it's trading, if you use, 1650 gold, is trading about 1 times NAV, but it's still discounted compared to its peers. If you use $1,500 gold, I guess it's about fair value now at NAV. But if you compare it to another pick that we did, like B2 Gold, which is run by Clive, it's a lot cheaper than its peers. But that's going to change, and it's a great deal. So that's kind of people, the projects. Every single project's in a positive swap line nation. You've got, look, man, there's no one better than Ross in the business. And my subscribers' average cost base is cheaper than Ross Speedy's by following that pattern. Now, think about that. The guy who's invested more money than anyone else, and he's the chairman, and the market provided you an opportunity to buy stock cheaper than him. That's how you play this game, right? And it was funny, Frank, like, we had so many subscribers saying, oh man, like, this isn't working out. And I just keep saying, I go, look at the value of this. This is going to work, but you have to be patient. This game's not day trading. It's truly a marathon investment. So that's kind of the style of what we do.
Yeah, and you can see why people were getting upset because the market was surging, right? And they're seeing this position in gold and going, "Wow, I'm sitting here in gold. We're not doing anything, but the market is surging. Where the Microsofts and Amazons are going up 15% a month." But more to the point here is it checks off all the boxes, guys, and that's the purpose of Marin going through that story with the management team, and of cash, the geography, the actual projects that you put together, the insider ownership. Ross Beatty run the show, and this is 500,000 plus one of the largest producers, and their all-in costs are at around $1,000, so which is pretty incredible. So great job on that.
It's lower, yeah, it's less than 900, and but it comes down to it. Like you got guys like that are no longer on the board, like Marcel DeGroot, Nolan Watson, Greg Smith. Dave DeWitt, Catherine McLeod, like Lucas owns about 4% or 5% of the company. Lucas Lundin. It was just a great group of guys, and there was never any arguments. There was one time that when we were merging JDL with Trek, there was one fund manager, and they said, "Mayor, you're the pit bull of the group. Why don't you deal with them?" And it was a interesting 3-hour WrestleMania meeting, and the deal happened as I wanted. But sometimes this is maybe one thing that people have to understand. If there's a large fund that's inside the stock, and their cost base and terms in the deal are different than the shareholders, their interests aren't aligned, and that was a big hurdle for the company that we took over beforehand. So, so many people, like, you have these geologists or, everyone focuses on their areas of strength. And sometimes you just got to pull back and go, okay, who are the players on this chessboard? And what are their interests in this game? What are their cost base? Are they looking to just roll more debt into this and control the deal? And then management are just employees and shareholders are just a nuisance. So you're going to actually, and that was something that, I took on full handle, because my style is, I call myself a positive activist investor, where my subscribers are in at the same price as me, and I'm the voice for all of us. And, you have to be very careful about what type of fees management teams are taking, what type of bankers are they using, who are the board? Are they just cronies, or are they actually there to represent the interests of the shareholders and moving the deal forward? When you look at, Jim O'Rourke and the impact he had on the deal, today his name's nowhere on the power deck, because now it's Equinox and it's a much larger story. But he was key to the early days. David Lowell's name is nowhere there. But let me share about the spinout. Today the spinout is going to be worth about $200 million. We financed it at a $15 million valuation, and I was being made fun of on the street for doing the deal. Let's think about that, Frank. And I said, these are the copper assets and gold assets that David Lowell, the greatest living geologist, like, think about the greatest artist in the world, saying, like, hey, and you know that it's trading at half the value of what they put into the ground on these assets, and it's stuck because of permitting delays. It was a no-brainer to me. And I wrote this, we will spin this out one day. And then all the Equinox shareholders that were with me, remember when we did the financing, you got a full 5-year listed tradable warrant, which is called the Katusa warrant, as Rick Rule calls it. And on top of that, for every 10 shares of Equinox you held, you got one share of a Solaris spinout. Well, that's trading at $1.50 today. Our value on that was, I think, 20 cents when we spun it out, right? So think about all of the dividends that you start getting out when you work with the right people, with the right assets, and you finance it at the right time.
Yeah, it definitely makes sense, and really great job on that. So I wanted to get to two more things really quick. The first is silver, right? Which is a market I know that you cover as well. You're like me, when I see people mention the gold silver ratio, I think it's completely useless. At least that's why I'm getting the indication from when, a couple of you post on your Twitter feed. But silver is breaking out here. I mean, it's close to a 5-year high where it's over $19. The 5-year high was a little over 20. That was in 2016. Massive move from the March lows, which was trading 12. But I'm not seeing the same move in silver stocks as I'm seeing in gold. And that gold price has gone up actually slower than when you're looking off the bottom when compared to silver. Is silver something that's attractive to you here? It seems like it's cheap based on where prices are, but again, it's not gold, and not that many people talk about it as much. But I want to get your thoughts on it.
So silver is an interesting, what they call it, the currency of gentlemen, right? The problem with silver is it's mainly a byproduct metal, and it's split between an industrial and a precious metal, meaning about 65 or whatever the percentage is used for industrial uses. And the global economy has been really bad recently, right? Look, I think there's a place for silver in your portfolio, and like I've got a whole team that handles marketing and all that. They're like, look, man, you gotta do something on silver. I'm like, why? And they're like, well, because the market wants. Like, well, I don't do anything the market wants. I do what I want. But when I put something out on silver, it's like the magnitude is wild. It's like the hardest core. They're like gold bugs on steroids or on crack, right? They're just believers in it. But here's the reality of it. Very few primary silver mines are economic. Okay, I've been to many, many, many of them. If you want silver, the way I played it in our newsletter, we had a big win, was Pan American. And again, it's not because the chairman's a good friend of mine, it's Ross Beatty. I bought it because it was cheap when we recommended it. It pays a dividend. It had no debt. My cost base was, at the lowest point of 5 years. That's how I like to do things. But I'm seeing so many, early stage silver showings, these little crappy sub 50 million ounce silver assets getting financed. Those are silver value traps. Be careful of those. So, yes, I financed a few silver projects, but right now I'm risk off, taking Katusa free ride on all my silver positions and gold positions. And people say, oh, he's bearish on gold. No. If you're in a position where you could sell 20% or even 25% of your holdings, and you get to keep 80 or 75% for free, you are stupid if you don't take that. Now, granted, it may go a lot higher and I've left some money on the table, but who cares? It's about risk mitigation. And Frank, if anyone gets anything from listening to this, whatever, my track record is there. It's not about bragging or pumping my tires or doing that. It's really to explain to people that this game can change so fast. And look how we saw it in 2016, how quickly that market, the window closed. So be careful when the liquidity shuts down. You could see these stocks go from, $15 to $7. Look what's happened with Barrick in the past. Gold Corp lost 2/3 of its value. Now is the largest gold mine in the world. I'm not saying that's going to happen, but I'm saying for your own portfolio, for your own family's, future, risk mitigation is the smartest thing to do. And specifically retail guys out there, like everyone, specifically your crowd who's listening to this, they don't have the positions that they're locked in a big way, whether they're an insider reporting. You really have to take a free ride as quickly, because the key to this game, whether the management teams like me or not, part of the success of my career, Frank, is having cash available when the market is down. The bankers can't raise anything because they blew up all their clients in the past. And thinking of going back to Altera, Northern Dynasty, where we did Equinox or Liberty or any of these deals, you are valuable to these management teams when in a bad market, they know you can raise money or invest in the capital. So having cash when everyone is fearful, that's the position you want to do it. And to do that, you need to sell some off the table when everybody's pounding their chest. And right now, every banker is excited. They're flying around, even though it's quarantine, they're still moving around or zooming around. People are making money again in the business. And that's when you need to reduce your exposure a little bit, take your money off the table, have a strong float. I'm not saying sell everything. I'm not saying I'm bearish. I'm just saying be smart.
No, it definitely makes sense. So we got like 2 minutes left here, and thanks so much for explaining all that because it does make sense. It's just a greed factor. And also, guys, don't forget when you're selling some of this out, provides liquidity for you to buy more positions or other things you like. But in 2 minutes, any ideas that you're looking at? I know you like to share a lot of those ideas, not necessarily there in your portfolio. People pay for that for your newsletter, but I could do some research. But anything that you're looking at that may look attractive, gold, silver, or any names that you might want to share that, again, you could just be looking into right now.
I got two things for you. Everyone's bashing Warren Buffett right now, and I find that really interesting that the greatest investor ever is getting disrespect from the market. Yet guys who are, holding cigarettes and swearing on their promos are getting like more follows than the legends in the business. Stick to the rules of law and gravity. And I'm with Warren on this. This market could go higher, probably will go higher because of what's going on globally. But there's nothing wrong with taking money off the table and having a lot of US dollars. Number two, I'm looking at an energy deal, and people are like, "Why? I want gold," and I go, "That's exactly why I'm looking at this energy deal. It's in my newsletter, and it's coming closer to my target price. I've been waiting 5 months to get that target price, and it's been in my newsletter, and I'm saying, don't pay it, relax. The market's going to get bored." And that's kind of where I'm looking at, to be a true alligator in this investment. When everyone else is chasing the prey, that's not the way to play. You want to be, just sitting there waiting for the right price for the right time. And then the other thing is, I just got a thing in my inbox about the Frank Curzio 12-day body. So that's what I'm working on right now during my quarantine. I want to look like you, Frank.
I'm trying to get in shape. I'm trying, buddy. So listen, as always, thanks so much for going on the podcast. I know that you're doing this in quarantine. And by the way, how close of a friend I am to you. So if you need anything, if you need, your Playboy magazines or whatever, I promise I won't tell anyone. I'm not going to tell anyone. I'll send them to you because I'm your friend. I'm there for you, buddy. No matter what, we all get it. I understand. But just want to let you know, I'm always a good friend when it comes to stuff like that. But
I appreciate it.
All right, cool, buddy. So listen, thank you so much. Thanks for the explanations. It provides incredible value. We've known each other for a long time. I love that you come to this podcast. You always provide value, and more important, you provide winners. And I know people respect that. So thanks so much for coming on, man. I really appreciate it, buddy.
Stay well, buddy.